Hello everybody, welcome back to the channel. I have an amazing video for you guys today. I found an article that you guys are going to absolutely love. It is from housingwire.com and I will have a link of this article down in the description below. Now check this out. They state the title, Fed's interest rate hike could create less competition in the housing market. More inventory in the market could attract scared off buyers. All right, let's read a little bit here. As the Federal Reserve announced yet another 75-point interest rate hike Wednesday, loan officers and lending executives already are well aware of the news. We're looking ahead, question whether mortgage rates will spike or dip in the aftermath. And even economists are divided on what's to come. Some believe rates have already peaked. Others say they'll climb until or unless the nation's economy officially enters a recession. Some believe the rate has already peaked. Others say that they'll climb until or unless the nation's economy officially enters a recession. But they do agree on one thing. Higher interest rates will quell housing demand, which will allow inventory to rebound and eventually spur the return of reluctant buyers. For consumers, this rise of interest rates means that unless the economy shows additional signs of tipping into a recession, mortgage rates are likely to trend higher, which will be a drag on the housing market. Mortgage rates leading up to June's Fed rate hike surpassed the 6% level as higher than expected inflation data triggered volatility in the market, which led to turbulence in the mortgage rates. Since the Fed's in June interest rate increased 75 BPS, mortgage rates in the recent weeks crept up to 5.5%. Now, we're gonna expect this to go a little bit higher too. Lawrence Young, the chief economist. Okay, so check this out. If it is possible that the 30-year mortgage rate may settle down at 5.5 to 6% for the remainder of the year. Still, mortgage rates are significantly higher now compared to 1 year ago, which is why home sales have been falling. You know what? I don't agree. I don't think mortgage rates are going to settle here. That's my honest opinion. I think mortgage rates by the end of the year are going to be closer to 7, maybe 8%. It is going to slow down the housing market. People are not going to, buy the houses. People are going to get spooked, and more people are going to put their house out on the market because they want to still get, some of those record high prices that are still going on right now. Look, let me just jump right here. Hold on. Check this out. This is the Redfin weekly housing market data, okay? So the median sale price, okay, the black line right here is 2022. Orange is 2021, red is 2020, and blue is 2019, right? The reason it went up this high from 2019 to 2022 is because we had 0% interest rates. So the people that could afford to buy, they went in and they bought, right? Now, when you think about coronavirus, right? Look at this huge dip right here, okay? This is because the country shut down. Everything was shut down. People weren't doing open houses. It was crazy. Who wants to put their house up, on sale during coronavirus? We didn't even know what was going to happen the next week. So as a result, right, everything got shut down and everything slowed down. So the feds got freaked out. So they lowered interest rates and the people with means started buying. But because it was low inventory, it made the prices just shoot up like crazy. Look, back 4 years ago, the house median sale price was $276. Now it's $385. Now you gotta ask yourself, did our salaries go up this much in the last 4 years? No. So how are you gonna justify this price, right? So this price is unsustainable. So what's happening, right, is that if you're thinking of selling a house, if you wanna, people are basically telling you oh no, it's gonna stay up. No, it's not gonna stay up because people want to sell their house for a lot of money. There's a lot of people that have equity and they want to pull that cash out because if they anticipate a drop, they put their house on the market, they sell it, they could buy it back in a year for a lot cheaper. All I'm saying is that I think there's going to be an increased supply, which is going to go ahead and make the housing market drop a little faster. So I don't necessarily agree with this lady, but that's just my opinion, right? It's okay for me to disagree, right? Here, but let's keep reading a little bit. There's a tug of war in the market expectations between the persistent high inflation numbers and resulting rapid Fed hikes and the increasing risk of a sharp slowdown and possible recession. If mortgage rates peak, potential buyers who had been scared off the rate spike might find their way back to the housing market. Yes, I agree. I think that as the housing drops, people are going to jump in. But people are not stupid because people are not, I think personally, I'm waiting for it to drop or hit this blue line right here, okay? Because I don't believe that the economy is in better shape today than it was in 2019. I just don't. Not after coronavirus, not after printing $10 trillion, okay? A lot has changed, guys. Our country literally, we spent $10 trillion, right? So a lot has changed and it has to come back down or else things are going to get ugly. So what does that mean? That means if you're in, actually, let's keep reading real quick. Check this out. Here's another quote. Job creations have been ongoing to date. Therefore, home sales could soon stabilize within a few months and then steadily turn upwards from early next year. While the options are more expensive and more costly to finance, the growing number will help the real estate market rebalance, giving potential buyers a much needed refresh. Okay. One thing about this, what they're saying right here is, yes, we do have very good unemployment levels, okay? They're very, very low. I do agree, but here's the deal, okay? What kind of jobs are those, okay? Are you talking $100,000 a year jobs? Or are you talking $45,000 a year jobs, okay? Big difference. Or $20,000 a year jobs. Big difference. Because when you look at the median sale price, okay, between 2019 and now, you can have all the jobs you want, but I guarantee you, if you were making $100,000 a year, okay, in 2019, and I bet you that the difference here, let me see the difference. So I'm gonna just try to eyeball this, about 25%. You tell me, if you were making $100,000 a year in 2019, are you making $130,000 today? $140,000 today? Did your salary go up that much? Because if it did, please comment down below, all right? I don't believe that most people's salaries went up that much, okay? The truth be told, that's my opinion. So when this person is saying, yeah, we have record low unemployment, yeah, but those people can't save, $100,000 to put it on a down payment for a $500,000 house, right? So the numbers are still hella skewed on this. No, I don't agree at all. Anyways, here's another quote. The question is whether the slowdown is a result of most consumers simply pausing a purchase decision while they see where interest rates and home prices settle, or whether they're having to delay a purchase decision indefinitely because of the affordability concerns. Well, I'm leaning right now towards affordability concerns. First of all, right now, people are scared. The market is kind of volatile. We've printed a lot of money. We had record low interest rates, which to some people, they might say oh, that's a good thing. Dude, that's not a good thing. That's not healthy for an economy. The reason the Feds lowered the rates to basically zero and is because the shit was hitting the fan and something had to be done. And, to get the economy moving, right? So they basically gave free money to the banks. The banks were able to, package that money and sell it back to us, as mortgages with record low mortgage rates, right? But if you look historically, there's a reason why interest rates usually have to be higher, because the government basically needs to make money, right? That's how it all works. And they make money by, lending out money with interest. So right now, here, if I continue to read, there was no major panic, whatever. So, this is, I don't totally agree with this article, but, go ahead and click down in the description and, go and read it for yourself. I think the market's gonna crash, but it's gonna be slow. It's gonna take like a year, maybe 2 years. It's gonna be like, you know, it might go like down, but it's gonna be like, you know. Anyways, guys, just want to say thank you for all look. I just started these videos not too long ago, and I've been getting a lot of views, and it's all thanks to you. I'm glad you guys are enjoying them. A lot of people are liking them, and a lot of people are subscribing, and a lot of people are leaving messages, so I really appreciate it. Thank you guys so much. I'm having fun making these videos, and I hope you're having fun listening to them. So again, thanks again. If you guys like these videos, you know, don't forget to smash that subscribe button and go ahead and like and leave a comment. Thank you guys so much for watching. I love you guys, and I'll see you on the next video.